Pete, good to see you. I have an important question. Is there any reason to use a traditional IRA? And the reason I'm asking is because America's IRA expert, Ed Slott, I know you know him well, recently told other industry experts that an IRA is just an IOU to the IRS. He says he doesn't see any benefit to using a traditional IRA right now because tax rates are so low. Do you agree?
Yeah, I absolutely do agree with Mr. Slats. And years ago, if we think back, just to 1980, Ronald Reagan came in, the top tax bracket was 70%. They lowered the taxes through the years, but when taxes are higher, if you're in the 40% tax bracket now, or excuse me, if you were in the 40% tax bracket, you're giving up 40% of those earnings to the government each year. So the
Hmm.
idea was to defer those earnings till retirement when your income went down and you're in a lower tax bracket. So tax deferral when income taxes are high and you're working makes a lot of sense.
You bring up a lot of good points there. Just explain them why a tax deduction is more attractive when rates are high.
Well, think about it. If the highest tax rate is 50%, you're giving away 50 cents on every dollar that you earn while you're working to the government.
Hmm.
So if income taxes drop to 25 or 20%, you're only giving up 20% on that dollar. So it's not as big of an incentive to defer that income, and you should look at alternatives to think about your taxes in the future.
Okay, we can talk about some of those alternatives because I also want to ask, let's say you converted all of your tax deferred accounts. As Slot says, theoretically, you've lowered your tax bill for the rest of your life.
Yeah, absolutely, because you lowered the taxes on the future growth of that money. So it's like ripping the band-aid off. If you're converting $50,000, that $50,000 will never be taxed again, and that growth is never taxed, and that money can be tax-free or sent tax-free to your kids after you pass away.
Mm.
Absolutely.
Now, how about investing in a brokerage account instead of an IRA? Because at least with a brokerage, there's no deal with the government, no debt there.
Yeah, absolutely. One ideally for my clients, we want to have a tax-deferred bucket of money, a tax-free bucket of money, your Roth IRAs, and an after-tax investment bucket of money. This is your non-qualified. You get paid on that money. You invest it in, let's say, a stock at $10 a share. It grows to $50, and when you sell it, you only have to pay taxes on that $30,000. But
Hmm.
the point is if you're married, married couples do not pay capital gains taxes until your income's over about $125,000. So you can control your taxes by diversifying your money. Not only diversifying stocks, bonds, and mutual funds, but qualified tax-deferred money, tax-free money in your Roth, and after-tax investments in a brokerage account with favorable capital gains.
Right.
Blending those three together, you need $50,000 for a new roof. You can control your taxes because if it's all in a tax-deferred account, all that money is taxable. You'll be
Right.
paying more in
I,
taxes.
it's easy to see this is what you specialize in. Thanks for that answer.
You
So, one more question. Slot believes that Congress is purposely making tax deferred accounts less attractive right now because the government is in desperate need of revenue. Do you agree with that?
Yeah, we do. We all know our deficit's going up and up and up. And as they cut taxes with the last tax law, they took away benefits that we had for many years and that Ed Slott talked about forever. The power of tax deferral. It used to be you can defer your income, taxes were higher, it made perfect sense. And then when you passed away, we were able to pass along our tax deferred IRAs to our children, and they were able to defer that over their lifetime,
Hmm.
right? Doing required minimums. So the power of tax deferral back in the day was excellent. Now, because they need revenues, they cut taxes on the front end and they're taking benefits away from us and our children because now when we pass our IRAs down to our children, they have to empty that IRA in 10 years, hence paying those taxes to fill the gap of the tax cuts. So the long term benefits, we're getting tax deductions, but we're paying more upfront.
Hmm.
It's push and pull. It's the way our government works, unfortunately.
Absolutely.
But yeah, I'm sorry, but planning this out in advance is the way to do it.
That's what I was going to say. Strategic tax planning so important, Pete. And again, this is what you specialize in. So if somebody wants to talk this through with you, how can they get a hold of you?
Yeah, please reach out. Send your friends. My phone number, direct line is 847-499-3342. Pick up the phone, give me a call, schedule a meeting, talk to Nicole, Liam, anybody who picks up the phone. love to talk about diversifying your investable assets.
Yes, very important conversation. Pete, thank you so much for your time today.
Thank you, Erin. Have a good day.